Hello friends, welcome to MAT Accounting for Joint Stock Company Issue of Debentures. It means it is an borrowing. A public company used to borrow way of debenture from the common public as a long-term loan, and this we are going to discuss in this video terms and conditions of issue of debentures. The following 6 terms and conditions of debentures are commonly found in practice. That is in number 1, issued at par and redeemable at par. It means a par means it is in face value. So whatever a face value collected by the company, the same face value company will return back at the time of redemption. Redemption means it is an repayable in future period. Number 2, issued at premium and redeemable at par. Premium means a company will collect more than its face value, but a company will redeem only the face value. A third one, it is an issued at discount and redeemable at par. Here a company will collect less than its face value, but the company will repay the face value. Number 4, issued at par and redeemable at a premium. Here the company will collect the face value, but a company will repay in a future with premium. Number 5, issued at discount and redeemable at a premium. In this case, a company will collect loan from the public less than face value, but a company will repay more than its face value. Number 6, issued at premium and redeemable at a premium. In this case, a company will collect loan from the public more than its face value, but a company will repay even more than face value. So we will discuss in this each term with journal entries. Let's see the journals. Totally we have 6 terms and conditions. In that, number 1, issue of 10 lakh 11% debentures of rupees 100 each at par and redeemable at par. So this first condition is an issue at par and redeemable at par. Here the face value of debenture is an 10 lakh. At the time of issue, a company issued at par means a company collecting 10 lakh rupees loan from the public as a par value, and also company going to redeem at par. So same 10 lakh company going to return back to the debenture holder at the time of maturity, and also company will pay 11% interest till the maturity period. Now we'll see how to record the journal. We should make the format of date, particulars, LF, debit and credit. The debenture holder at the time of giving a long-term loan to the company way of debenture, they should deposit into the company's bank account. So we need to debit the bank and we need to credit debenture application and allotment account 10 lakh. So here we debited the bank because according to a modern approach, when asset increase we need to debit it. The bank come under asset category, so when bank balance increase, the asset increase in business. So that is the reason we need to debit the bank and we need to credit the debenture application and allotment, and we should write the narration being 11% debenture application and allotment money received. After receiving money from the debenture holder, then the same we need to transfer to debenture account, and each case we need to record a 2 journal entry, one for receiving the loan and the second for the loan which is received we need to transfer to debenture account. Then second entry, 11% debenture application and allotment account debit to 11% debenture account 10 lakh. Here the debenture we credited. Debenture is an loan, it is a long-term loan collected by the company from the public. In future period the company want to repay this amount, so whichever payable by the business in a future, it is a liability for the business. So according to modern approach, when liability increase in business we need to credit it. So that is the reason we credited here, and we should write the narration being 11% debenture application and allotment money transferred to debenture account. Second one, issue of rupees 10 lakhs 12% debenture of rupees 100 each at a premium of 10% and redeemable at par. In this case, a company is issuing with a premium, but the company going to redeem a par, means only the face value company will return back. So company issuing the debenture worth of rupees 10 lakh rupees for 12% interest, and the debenture holder should pay at the time of issue 10% more. So 10 lakh plus 10%, total 11 lakh rupees the debenture holder should pay at the time of issue, and the company will redeem only 10 lakh at the time of redemption. The maturity period company will repay only 10 lakh rupees. Let's see the journal. As we know well, a debenture holder should deposit the amount into the company's bank account as a debenture. So we need to debit the bank account debit to 12% debenture application and allotment account 11 lakh. We know well the face value 10 lakh, so 10 lakh face value, 10 lakh into 10% is an premium. So 10 lakh into 10% we will get 1 lakh rupees. So 10 lakh is an face value and 1 lakh rupees is an premium. A company collecting from the debenture holder 11 lakh rupees. So we need to debit the bank and we need to credit to 12% debenture application and allotment account 11 lakh. We should write the narration being 12% debenture application and allotment money received. After receiving the application money and after allotment, a company will transfer to debenture account. So the second entry, 12% debenture application and allotment account debit 11 lakh. We need to make sure this 11 lakh is an 10 lakh as a face value and 1 lakh is an premium. So when we credit, we need to separate the debenture amount and also we need to separate securities premium. So when we credit to 12% debenture account 10 lakh rupees to securities premium account 1 lakh rupees. A company collected extra 1 lakh from the debenture holder as a premium. After collecting this premium, company will transfer to securities premium account. Here a debenture debited because a debenture is a loan collected by the company for long term. So it is a liability for the company. Company need to repay in a future. So which is payable in a future is a liability. So we need to credit the liability because liability increased. When liability increased, we need to credit it according to modern approach. And even we need to credit securities premium. It is an extra amount collected by the company. This extra is a gain for the company. So credit all the incomes and gains according to traditional approach. Even according to modern approach, when incomes increase, we need to credit 1 lakh rupees. So at the time of transfer, the 11 lakh rupees, we need to transfer 10 lakh to debenture holder account, and the balance 1 lakh rupees we need to transfer to securities premium account. And we should write the narration being 12% debenture application and allotment money transfer to debenture account and securities premium account. Next is a third one, issue of rupees 10 lakh 9% debenture of rupees 100 each at a discount of 10%, redeemable at par. So in this case, the face value of the debenture is 10 lakh actually, but at the time of issue, company is issuing with 10% discount. That means the debenture holder need not to pay 10 lakh, they need to pay less 10% only, but at the time of repayment, at the time of redemption, the maturity period, a company will repay 10 lakh rupees. Let's see how to record the transaction. We need to debit the bank 9 lakh and we need to credit to 9% debenture application and allotment account 9 lakh. We know well the face value of debenture is 10 lakh rupees. The company gave a discount of 10%, so we need to minus 10 lakh minus 10%. So 10% on 10 lakh is 1 lakh rupees. So 10 lakh minus 1 lakh, the balance 9 lakh only the debenture holder depositing into the bank account. That is the reason we debited only 9 lakh into the bank. And we should write the narration being 9% debenture application and allotment money received. After receiving the application allotment money, now the company will transfer to debenture account. A second entry, 9% debenture application and allotment account debit 9 lakh, because since the company received only 9 lakh from the debenture holder, and 1 lakh rupees loss for the company because the face value 10 lakh The company received only 9 lakh. The balance 1 lakh is on loss for the company. So we need to debit discount on issue of debenture rupees 1 lakh. According to modern approach, when expenses or losses increase in business, we need to debit it, and we need to credit into the debenture account 10 lakh rupees. The debenture holder will pay only 9 lakh and company will add 1 lakh in their account, and totally the debenture holder will be credited 10 lakh rupees in their account. Here we credited the debenture. We know well the debenture is a liability for the business, because in future the company need to repay this. So when liability increase, we need to credit the debentures. So we should write the narration being 9% debenture application and allotment money transferred to debenture account and discount adjusted. Next we'll see the fourth one, issue of 10,000 10% debenture of rupees 100 each at a par and redeemable at premium of 10%. In this case, a company issued, here I took a number of debentures, not an amount. So the number of debenture is in 10,000 debentures and 100 each. So total 10 lakh only as a face value. A company issued at par. So company going to collect same 10 lakh from the debenture holder, but at the time of redemption, a company going to redeem at a premium of 10%. So while taking loan, debenture is a loan. While taking loan, company will take only 10 lakh, but at the time of redemption, means at the time of repayment, a company will pay 10% extra to the debenture holder. Let's see how to record the transaction. Bank account debit 10,000 into 100. In this we need to multiply, because here I took example of is a number of debenture. So number of debenture is in 10,000. The rate per debenture is in 100. That is the reason multiplied. In the previous questions I gave directly amount, so that is the reason I didn't multiply. Here I didn't give directly. So 10,000 into 100 each, it is in 10 lakh rupees debited. We know well when bank balance increase, we need to debit it, and we need to credit to 10% debenture application and allotment account 10 lakh rupees. And we should write the narration being 10% debenture application and allotment money received. After receiving application money, now company will transfer to debenture account. See here, 10% debenture application and allotment account debit 10 lakhs. A loss on issue of debenture account 10,000 into 10. It means at the time of redemption, a company going to redeem with 10% premium, means a company going to repay 10% extra to the debenture holder at the time of redemption. So it is a loss for the company at the time of redemption. So that is the reason we debited here. So loss on issue of debenture account 10,000 into 10 rupees. This 10 rupees is in the face value of debenture is in 100, and the company going to pay 10% premium. So 100 into 10%, we will get 10 rupees. So 10,000 into 10, it is in 1 lakh rupees a company going to repay in a future. So it is a loss for the company, and we need to credit to the debenture to 10% debenture account 10 lakhs and to premium on redemption of debenture account 1 lakh. As a loan, we need to repay 10 lakh, it is a liability, and also as a premium on redemption also, it is an additional liability for the business. That is the reason we credited. So when liability increase, we need to credit it. So we credited even 1 lakh rupees, and we should write the narration being 10% debenture application and allotment money transfer to debenture account. Whenever company redeem with premium, this entry compulsory, we need to record it. This loss on issue of debenture entry compulsory will come, because at the time of redemption it is a loss for the company. That is the reason we debited. And also we need to credit to premium on redemption of debenture. This entry also, it will the common entry at the time of redeemable at premium, because it is an additional liability for the company at the time of repayment. That is the reason we need to credit it. So at the time of redemption, if it is premium, then this two entries we need to record. Loss on issue of debenture as well as to premium on redemption of debenture is a common entry. So being 10% debenture application and allotment money transferred to debenture account. Now we'll see the fifth one, issue of rupees 10 lakhs 15% debenture of rupees 100 each at a discount of 10% and redeemable at a premium of 10%. In this case, the face value of debenture is an 10 lakh actually, but the company issued with a 10% discount. A company not going to collect entire 10 lakh from the debenture holder. The company will collect less 10%, but at the time of repayment, a company going to pay 10% more. So at the time of collecting less, and even at the time of repaying, the company going to pay the more. Let's see the journal. We need to debit the bank as usual. So bank account debit to 15% debenture, application and allotment account 9 lakh. So here the face value of debenture is in 10 lakh rupees and the company gave a 10% discount. The 10% on 10 lakh is in 1 lakh rupees. So 10 lakh minus 1 lakh, the balance 9 lakh company received. So debited the bank and we need to credit 15% debenture, application allotment account 9 lakh. And we should write the narration being 15% debenture, application and allotment money received. After receiving, we need to transfer to debenture account. So at the time of transfer, so here we should be very careful to record the journal. At the time of transfer, 15% debenture, application and allotment account debit 9 lakh because the company received only 9 lakh from the debenture holder as application and allotment. We need to debit it. And the company issued at a discount of 10%. So discount on issue of debenture is in 1 lakh. Already we know the face value is in 10 lakh. 10 lakh into 10% is in 1 lakh loss for the company. When losses increase in business, we need to debit according to American approach. And also we need to debit to loss on issue of debenture account is in 1 lakh because at the time of repayment, the company going to redeem with the 10% premium. So this is also loss for the business. So loss on issue of debenture, total the 10 lakh worth of debenture into 10% the company going to redeem at the time of maturity period. So it is a loss for the business. We need to debit it. So totally we need to debit at 3 entries. First for debiting the application and allotment, and we need to debit 1 lakh. This discount is a loss for the business. And again we need to debit 1 lakh because it's a loss on issue of debenture because at the time of redeem, the company redeem with a premium of 10%. So a 1 lakh rupees loss, and we need to credit to debenture holder account 10 lakh rupees. Even the company collect only 9 lakh from the debenture holder, a company going to give a discount of 1 lakh rupees. So 9 lakh plus 1 lakh. The total 10 lakh will be credited to debenture holder account. So we need to credit 15% debentures account 10 lakh rupees. And also we need to credit as an additional liability at the time of redemption to premium on redemption of a debenture 1 lakh rupees. In future, when going to repay at the time of maturity period, a company will repay 10 lakh rupees as a debenture amount, and also company going to redeem with a premium. This is also additional liability for the business. We need to credit it. So when we debit, we need to debit 3 entries. One for application allotment, number 2 for discount on issue of debenture, number 3 for loss on issue of debenture. This discount at the time of issue, this loss is in at the time of redemption, company going to pay it, and we need to credit the debenture holder debenture account as well as a premium on redemption of debenture account. And we should write the narration being 15% debenture, application and allotment money transferred to debenture account. Next we'll see the 6th one, issue of rupees 10 lakhs, 7% debenture of rupees 100 each at a premium of 10% and redeemable premium of 10%. So in this case, a company issued the face value of debenture is in 10 lakh and also company collecting premium 10% from the debenture holder. So at the time of depositing into the company's bank account, they need to deposit 10 lakh for loan and 10% for premium, total 11 lakh they need to pay for it. But at the time of maturity period also, company going to return back 10 lakh face value as well as 10% as a premium. Let's see how to record the transaction. Bank account debit 10 lakh is in face value plus 1 lakh is in premium. A debenture holder deposited 11 lakh rupees into the company's bank account. When bank balance increase, we need to debit according to modern approach, either we called as American approach. and we need to credit to 7% debenture application and allotment account 11 lakh. So we should write the narration being 7% debenture application and allotment money received. After receiving application and allotment money, so we need to transfer to debenture account. So as second entry, 7% debenture application and allotment account debit 11 lakh, because a company already collected from the debenture holder application as well as allotment as 11 lakh rupees, and we need to debit loss on issue of debenture, because at the time of redemption a company going to redeem with 10% premium. So at the time of redemption it is loss for the business, so we need to debit loss on issue of debenture 10 lakhs into 10% 1 lakh, and we need to credit to the debentures to 7% debenture account 10 lakh. So whenever we credit into the debenture account, we need to credit only the face value. Face value we know well already, it isn't 10 lakh rupees, so we need to credit 10 lakh, but the company collected already from the debenture holder is in 11 lakh rupees. So out of 11 lakh, company transferred to debenture account 10 lakh, the balance 1 lakh transferred to securities premium account. So this 11 lakh we need to divide 10 lakh for debenture and 1 lakh for securities premium account, and we need to credit to premium on redemption of debenture 1 lakh, because this 1 lakh is an additional liability. At the time of maturity period, company need to pay additional 1 lakh rupees to the debenture holder. 10 lakh the company will pay as a loan amount, a debenture is a loan, and as well as the company will repay 1 lakh rupees as a extra. Total 11 lakh the company will repay at the time of maturity period. So that is the reason a premium on redemption of debenture we credited, because it is a liability. Here we credited security premium and also we credited premium on redemption of debenture. Should not get confused, because the security premium is a gain for the business. At the time of issue a debenture holder paid off, so company will transfer to securities premium account. But this premium on redemption of debenture, it is a liability, because the company going to repay at the time of maturity period. So that is the reason, so we credited even premium on redemption of debenture 1 lakh rupees, and we should write the narration being 7% debenture application and allotment money transferred to debenture account. Hope you understood this particular concept. If you like this video, please subscribe my channel. Thank you.